One, um, I have to stay here because we are on being streamed live. And I'm Butch Bacani, and I lead the UN Environment's Principles for Sustainable Insurance Initiative. It's the largest collaborative initiative between the UN and the insurance industry. So welcome to the session on how city managers can engage more effectively with the insurance industry on the topic of resilience and sustainability. And we have a really distinguished guests of panelists today who will join us on this topic. But we also want to acknowledge those who are present in the room because we want to make sure that we also have the chance to interact with you on this very important topic. I also just want to start with a few technical announcements. So beyond the fact that we are being streamed live, we want to make sure that you have the chance to share your insights, not only in the Q&A segment, but also through an online service as the Slido tool. And my colleague Alvaro is going to explain a few technical points on that to make sure that you are able to participate.
So good morning to everyone. The idea through Slido is that you can use it using your cell phone devices. You can join to Slido, sli.do, or just Google Slido, and then they will ask you for a code, and it's climate risk. If you do so, you will be able to do interact questions as we speak, and also be part of some polls that will take place later. So if anybody have any question or something, I'll be here. Again, Slido, S-L-I-D-O. People through the streaming service are already connected there, and you will see them with questions and participated in our polls. Thank you.
So it's Slido, and then the password is climate risk.
Exactly.
In just one word, right?
Yeah, together. Yeah, that's right. Thanks.
Okay, so let's get on. So before we go on to our panel discussion, I also just want to give a bit of an overview of what the UN has been doing with the insurance industry on sustainable development issues before we zoom into the focus topic of this session, which is be more on integrated climate risk management. Do you have the click? Yes. Next one. Yeah, should we just move? It's not here. We're looking for the clicker. Oh, it flew to the other end. So the whole premise of engaging with the insurance industry on sustainable development issues has always been based on what insurers can do. Ultimately, the insurance industry can do three core things as far as sustainability issues is concerned. One is risk management. The whole agenda of the insurance industry is about better management of risk. So one of the things that insurers have developed over many years is, for example, the catastrophe risk models, understanding how risks, identifying risks, quantifying them, and finding ways to prevent and reduce risks. And then ultimately, we can't eliminate all types of risk, so there is residual risk, and these are the things that are transferred to the insurance industry through insurance contracts, which allows people, which enables many economic activities. At the same time, it allows gives communities, businesses, and governments a safety net to absorb financial shocks. And lastly, it's the role of the insurance industry as institutional investors. Globally, the industry has over 30 trillion in global assets under management. So the way they invest would also have a material impact on economies and companies around the world. So this is like the basic premise behind why the UN is very keen in engaging with the global insurance industry. We have, in the past few years, we have had a very strong collaborative agenda with ICLEI. And this is simply a manifestation of the growing need for partnerships between the public and the private. And a couple of years ago, in 2017, we were here in Bonn, and we came up with the idea through this same platform in Bonn of developing a set of insurance industry goals for cities. Why did we think about this? We thought about this because in a UN context, we knew that the global framework for sustainable development was already created in 2015 through the UN Sustainable Development Goals. However, the SDGs, as many of you know, were created by member states and the UN. That's really policy speak. What we wanted to understand was how to bring the SDGs in the context of the insurance business. So if you look at what I explained earlier in terms of the triple role of the insurance industry, we tried to boil down SDG 11 on cities into risk management, insurance, and investment terms, which is really the language that insurers understand. At the same time, we had the capacity in a year or so to engage with local government officials, whether it's mayors along the Mississippi River in the US, local government officials in Quito or in Sydney, and also here in ICLEI, to understand what are the core issues for insurers and cities in different regions. And we ended up with these 10 goals, which is almost like a translation of SDG 11 on cities into what it means for the insurance industry that they can do. So goal one is actually the focus of our session today. And the follow-up session after this one, after the break, will go deeper into practical solutions as far as climate risk management is concerned. But we know that it's not simply a climate agenda. There are also very much interrelated agendas on pollution, as far as protecting heritage sites is concerned also, access to insurance and financial services for the urban poor, for example, and energy security for cities are actually important factors. At the same time, we have realized that there are things that need to be done that could enable insurers and local governments to address goals 1 to 5. For example, the need for better data, analytics, insurance literacy, which is one of the things that we're trying to address in this session, and also potentially ways to shape a strategy and action plan at the local level that will proactively engage the insurance industry on these issues. So this was launched at the ICLEI World Congress last year in Montreal. And we were very happy that from the head of UN Climate Change, Patricia Espinosa, to global leaders like the Group C of Munich Re, and through to the mayor of Montreal, we got unequivocal support on this agenda. However, these goals are simply a means to an end. So we wanted to see, as a global framework, how we can push this agenda forward in the coming year through to events like this one. So what has happened since then? We were just in Lagos in Nigeria a couple of months ago, and in the same month, the UN Secretary General said that if we can't make it work in Africa as one of the most vulnerable regions in the world, it's going to be very difficult to achieve sustainable development elsewhere. Hence, there is a particular focus on reaching out to the most vulnerable, hence looking at Lagos as an important example of over 21 million inhabitants, coming from the most populous country, but with serious sustainability issues from sea level rise to energy insecurity to flooding as well. So what has happened in Lagos recently is that through the leadership of Nigerian insurers, we will now be engaging with the state of Lagos to develop a first ever city sustainable insurance roadmap in the world where the local government officials will hopefully be able to shape a plan with insurers on building resilience and sustainability in Lagos through risk management, insurance, and investment activities of the insurance industry. At the same time, there was a commitment by the wider African insurance community to develop key tools that are needed to better understand risk in Africa. For example, there's no flood map for Lagos. The same for ACRI, and I know colleagues from GIZ, Matthias, can talk about that later. And also Mozambique and Mauritius. Mozambique, as we know, was recently hit by cyclone after cyclone, Idai and then Kenneth. And that has raised again the agenda of how do we better understand and prepare for risk, and what can we do to better manage climate-related risks in particular. At the same time, I wanted to share with you that the global insurance industry, many of the leading global insurers around the world are at the moment enhancing their capacity to better understand climate risks. What are we doing right now is that based on whatever analytics that insurers have used in the past to better understand disasters, we are pushing the agenda forward by really extrapolating that agenda and looking into the future based on latest science. The latest science shows that a 1.5 degree world is very different from a 2 degree world. In fact, we were with Christiana Figueres earlier this year at Allianz in Munich, and she said, had we known the latest science based on the 1.5 degree report, the Paris Agreement would have looked very different in 2015. But that science was not available then, but we have it available right now. So what we're trying to do is trying to extrapolate what would the world look like based on temperature increase scenarios of 1.5 degrees, 2 degrees, or even 4 degrees, and what would that mean in terms of economic and insured losses. And that means translating science into financial risk that can better inform policymakers, businesses, and communities to make more risk-informed decisions. This is the single largest collaborative exercise by financial institutions to better understand the implications of climate risk. So this is what Christiana was saying, and we were very happy that at the private sector side, we were joined by the group CEO of Allianz itself. Allianz itself as a company operates in over probably 100 countries. They have also several trillions of assets under management that they, as a global investor. So that's just one company. So you can see, and if you add Munich Re to that, then you have two global players domiciled here in Germany who actually have a lot of reach globally. And multiply that by many insurers around the world, then you can see the ripple effect of what can be done on this agenda. It's not the only thing that we are working on. In 2 months' time, we will be finishing the first ever global guide by the insurance industry on how to protect World Heritage Sites. Why are we looking at this agenda? We are looking at this, we are working with WWF and UNESCO because if you look at World Heritage Sites, there's two types, cultural and natural. So cultural could be Kyoto, the Eiffel Tower, etc. And then you have natural World Heritage Sites like Mount Kilimanjaro, or the Galapagos Islands, or the Great Barrier Reef. The reality right now as we speak is that if you look at natural World Heritage Sites, more than half are threatened by harmful industrial activities, so particularly extractives, oil and gas, etc. And if you look at the latest UN report on biodiversity and ecosystems, we are really looking at the sixth mass extinction, because there's already about 1 million plant and animal species which are threatened because of unsustainable activities worldwide. And if we look at World Heritage Sites as the crown jewels, particularly natural World Heritage Sites as the crown jewels of biodiversity, and which are supposed to be protected by a convention, World Heritage Convention, and protected by national legal frameworks, and yet more than half are threatened by industrial activities, then the future of sustainability is bleak. So we need to be able to address them, and what we're trying to do is through risk management and insurance and investments of insurers, we want to make sure that those activities are not leading to unsustainable activities in or around World Heritage Sites, but in fact helping reduce risk and protect them. And lastly, it's something that probably more and more people are more aware of, thanks to folks like David Attenborough and the Blue Planet. But from the UN in particular, this has been one of the most successful campaigns in terms of having clean seas and addressing marine plastic litter. However, what you see in the ocean is not simply, it didn't come from the ocean. It's actually from a lot of land-based activities. So talking to colleagues, it actually, most of the plastic that you see there really just ends up there. But really it's a result from many land-based activities as well. The other serious thing here that we know, beyond affecting waste management, sewage systems, and biodiversity, is the topic of microplastics and nanoplastics. Microplastics are less than 5 millimeters, and nanoplastics are even smaller. So if you think you can be worried about plastic pollution, you should also be worried about things that you don't know that may have plastic. For example, toothpaste, or cosmetics, or body scrubs. And for me, that's even worse. If you don't even know that there's plastic in there. So the impacts on human health of microplastics and nanoplastics is also still being, the science there is getting more advanced on the potential negative effects of cumulative effects of this agenda. But whether it's on the marine environment or land-based activities through to human health, this is an agenda that insurers are trying to address. And we will already be producing a first ever study showing how insurers can address this through their insurance and investment activities by the Our Ocean Conference in Oslo this October. So really from a UN perspective, the agenda has been set. We have the SDGs, and what we want to do is through engagement with the private sector and the financial sector in particular, banks, insurers, and investors, we want to make sure that we are able to finance these sustainable development goals, whether it's through lending, insurance, and investment, and to harness the capacity of the financial sector and the insurance industry to help achieve the SDGs. At the same time, we want to make sure that we stop financing or investing in unsustainable activities that lead to the degradation of the environment and social inequality as well. So hopefully through more engagements like this at ICLEI and others, that we can continue this journey of having more active discussion between local government officials like yourselves and the insurance industry on this agenda. And that's a little bit of the slides that you'll get pretty much for the rest of this session. There's nothing else. The only thing that I wanted to introduce at this point is that our colleagues at GIZ have produced an ACRI Plus, have produced a very interesting video on integrated climate risk management. So if we take one of those insurance industry development goals for cities, goal 1, on making cities climate and disaster resilient. Let's try to take that topic and introduce this topic of integrated climate risk management in the context of cities, and then we go on with our panel discussion. All right, so this will be a video of around 5 or 6 minutes, I think, and after that we will proceed with our discussion.
Meet Emma, the mayor of the city of Titinati. Her city is very crowded and is quickly growing and developing. However, this rapid economic growth contributes to climate change due to the increasing amounts of greenhouse gases the city emits. As mayor, Emma deals with floods as one of the impacts of climate change. Flooding affects the day-to-day activities of the city and damages properties, and even claims lives in extreme cases. This does not only slow down growth and development, but can wipe away years of progress made. The good news is that actions can be taken to lessen the impacts of climate change on cities. The integrated climate risk management approach is a holistic understanding to strengthen cities' resilience towards the impacts of climate change. The concept entails risk prevention, retention and transfer, preparedness, response and recovery. These 5 steps are interlinked and work best when the activities are coordinated together with city authorities and inhabitants. 1. Risk prevention. This involves identifying a hazard in a particular area and checking how the city infrastructure and day-to-day activities are exposed to that hazard. This will determine what can be done to prevent damage if there is a flood. Before the rainy season, the mayor can invest in widening and cleaning drains. Furthermore, she can make and enforce local laws to ensure that people do not build in flood-prone areas. These are all examples of actions that can be taken to prepare a city to reduce its risk of flooding. 2. Retention and transfer. The reality is, even if all mitigation and adaptation measures to climate change are taken, a city may still face the risk of flooding. It is also possible that measures to mitigate or adapt to climate change may simply not be taken because they are too expensive. In both cases, this unavoidable risk is called residual risk. This type of risk can be either retained or transferred. Emma has the possibility to transfer them to the insurance sector, which increases the financial stability of the city of Titinati. 3. Preparedness. As the name suggests, Emma must prepare for floods. As mayor, Emma can take out pre-disaster financing, that is, financing before a hazard strikes, to ensure that funding will be available immediately after a heavy rainfall. This money can be used to provide emergency relief to people who have been affected or support the reconstruction of public assets. As mayor, Emma can invest in an early warning system that can alert people before a heavy rainfall. Furthermore, she can align her city's climate risk management strategy, put in place measures to protect the city's critical infrastructure, and work with relevant agencies to design a contingency plan to respond to a disaster. The contingency plan will require money to be prepared, and this can be obtained through pre-disaster financing. 4. Response. In the event a flood actually happens, emergency search and rescue for individuals who may be caught up in the flood must be done. Emergency food and clothing, medical support, and temporary housing may be provided in coordination with relevant agencies. The absence of accessible finance may make these services either slow or not happen at all. This may result in an increase in loss of lives and property. Payouts of certain insurance products can address these needs and can reach the affected within 10 days after the disaster. And 5. Recovery. The road to recovery can be long and difficult, but with the innovative financial assistance, it can be quicker and easier. With possible payouts from climate risk insurance, Emma can build back, hopefully better, bring the city back to its normalcy, and strengthen its resilience if there are any future unfortunate events. This can be done by examining the affected areas and repairing infrastructure in a smarter way that prevents these damages from happening again. To sustain and accelerate the recovery process, investment in education should be made. The campaigns should educate the people living in the city to, for example, remembering to regularly clear drains and practice proper disposal of waste. In conclusion, cities, as engines of growth, development and culture, must adopt an integrated climate risk management approach if resilience to climate change is to be strengthened. Risk transfer solutions, in combination with other risk management and especially risk reduction approaches, have the possibility to significantly reduce risk and make cities safe, productive and resilient.
Okay, I hope that was a helpful introduction on a particular segment of the sustainability agenda, particularly integrated climate risk management, which we'd like to zoom in now into our discussion. So we're joined by a distinguished panel. I'll introduce them as they speak. So, but what we wanted to do was achieve a certain degree of balance between industry perspective and also local government perspectives. So I'll start with our guest from Allianz, Simone Ruiz-Vergote, Managing Director for Allianz Climate Solutions, fresh off the train station, made it just in time. Simone, I was just citing some of the leadership that Allianz had before you entered earlier. I mean, Christiana Figueres was with us in Munich a few months ago, and there's a very strong call to action on what insurers can do on various angles of climate risk management, from adaptation to mitigation. I think it would be just insightful for a very large global insurer like Allianz to operates in many countries on what are your perspectives on integrated climate risk management, but also bringing it into the level of cities.
Thank you so much, Butch, and apologies for being a little late. I just came in with the slide of our CEO, so I guess just in time. The video we just seen reminds me of the videos you see when onboarding on a plane, and the typical safety, security instructions that you would watch every now and then, maybe especially when you board with your children, but usually you would tend to ignore them. With that video, I think we see an important difference. Oh, I'm not on. Yeah. Sorry, is it better now? I guess, yeah. However, the video here is different in a sense because you need to watch this before and well before an event occurs, and you need to start this process also well before, simply because it takes a lot of time. So as an insurance representative here, I can tell you that we have been working now for a couple of years together with the GIZ and other public partners to look at how disaster risk management can actually form a bond with insurance. And what I've learned along this process is that insurance usually comes very late in this process. However, the expertise that we have as simply because we are needing to price risks, so we have a lot of expertise around risk models, risk exposure, the hazards from simple weather events to complex accumulation of events, as well as rebuilding in line with, so that actually rebuilding so better so that actually there is less of an exposure to these events to come, means that we actually can come in such a process much earlier than just simply writing the insurance policy. We can advise on the risk planning, we can advise on the also the process of disaster management. So this is something where we have been working very closely, especially now with the GIZ, in the case of two local cities. So one is Accra, the capital of Ghana, and the other one in Morocco, a place that Maxime, you can say something more about, I guess, where there is a high risk of flooding. And so an idea is that once you have put in place the risk management process, so the entire disaster risk management process involving lots of stakeholders, you then find a way to provide an insurance that is affordable and that pays out quickly. I think, Butch, you have mentioned the fact that insurance, no, sorry, it was in the video, in fact, that there is a very fast possibility for payout, for instance, which is very important if you have an emergency event. So the fast recovery. And that's where I come back to your original question, Butch. Insurance can provide a way, it's a little bit like a safety instrument. When you have when you have assessed your risk, when you have looked at ways to reduce the risk exposure, only then would you want to insure, because otherwise it's also very expensive. You cannot just insure an event that comes back every year, say a flooding that affects part of your city, maybe something that you see on a very recurrent basis, but that is very expensive to insure. However, a flood event that affects an entire city leads to great damage that only comes maybe every 10 or 20 years is something that you would choose to buy insurance for. And that's affordable, and that's a good it's a good risk approach, really. I think I stop here, and I hope we can have more discussion. I just would like to say that if we look at the current developments, in particular now I've seen in India, Chennai, the second largest city, being without water. Every 6 of the 10 largest Indian cities having depleted their groundwater reserves, according to a very recent study by 2021. This is not just climate change, it's also socioeconomic factors. And we need to look at both in conjunction. So you need to find ways to deal with all of these factors together. And I think for an insurance industry, it's clear that we do not only want to propose remedies in terms of the risk transfer, but we are also affected. This is huge impact from an economic perspective. And as an insurer, you are invested in each and every activity of an economy. And that means also we look at it from an investment perspective. And I think that was the point you made earlier, which that we really are part of this, affected by it. We can provide solutions, and we need to also measure for ourselves and our own activities how the journey will be and what the risks will be. So we hang in that together.
Yes, thanks, Simone. Sorry. Thanks, Simone, for that. I love the plain analogy, actually, about being prepared all the time. If you take Singapore Airlines, they will tell you, like, please watch this video even if you have seen it before. And I have friends who are pilots, and they say they have to read the manual every time they are in the cockpit and make sure that they get everything sorted before they take the voyage. And I think this is what Simone is saying in many ways. It's not simply about thinking about financial loss when it happens, but also thinking about managing risk ahead of time in case it happens, but also preventing it to begin with. And because no one ultimately wants to have losses. And if it does happen, then there is this financial benefit through insurance that could be gained if that happens. So I think, thank you, Simone, for articulating that. I think it would be quite interesting if I just have a quick follow-up for you. How are you engaging with your peers in the insurance industry? I mean, Allianz is doing a lot of great things, but it's not everyone may be an Allianz.
Yeah, very important aspect, in fact, is to support the local insurance industry in many countries that currently have very low insurance cover. We call it a protection gap, because the insurance against natural disasters in developing countries that are most exposed to such disasters and will be most exposed in the future is actually extremely low. I think we count around 1% in particular in areas where the the value of assets is also particularly low. So that means remote areas, difficult to access for an insurance company, areas that have that have a very high propensity to be affected by floodings, by droughts, by hurricanes, and where people are very badly sheltered against these weather events. And so we are actually looking to support also the regulatory infrastructure to make it possible for local insurers that have the best knowledge of these areas and the best knowledge of people's plights, really, are closest to them, to work together to provide such insurance. That also entails capacity building and transfer of expertise. So we are part of a new forum, and we are part of your initiative, of course, but we are also part of a new forum that looks at public partnerships together with World Bank and UNDP, which is called the Insurance Development Forum. And they are just about to issue a guide on how to insure public assets, which I think is very well written. It's a bit an expert language, but it is also a really good guide for mayors to go about ensuring their most exposed public infrastructure. And that is crucial, as we have seen. For instance, in Mexico, they have such a very comprehensive disaster risk finance and risk reduction mechanism in place. It's called FONDEN. And they have seen that if you have such an infrastructure in place, you can reduce the post-disaster stress quite tremendously. They have measured that it's about 2 to 4% increase in economic or uptake of economic activity after the disaster, since they have introduced this special fund.
Thank you, Simone. And I think this goes to show all the possibilities and innovations happening. And I think the fact that you are reaching out particularly to vulnerable countries is very interesting. So you're not simply insuring Germany, but actually moving out and addressing issues around the world. And it's even more telling that we have colleagues from Africa on this panel who can speak about their context more in detail. But before we go into that, I'd like to introduce Dr. Maxime Souvenet from the Munich Climate Insurance Initiative. It's obviously an initiative focused on climate change, but also working in particular with the insurance industry. Maxime, your thoughts on this topic?
Yeah, thank you very much. So thank you very much for the introduction. And MCI, the Munich Climate Insurance Initiative, is an innovation app that works together with insurers, experts, but also researchers, and in order to find out innovative solutions to increase resilience of the poor and vulnerables, mostly in developing countries. We work, for instance, together with GIZ in the project ACRI Plus, which is looking for solutions in different sectors. And Simone was talking about this project before in Morocco. We were working in a city which was Ait Melul. It's close to Agadir, and it is very affected by flood risk. But one message I would like to deliver on that's very often in an urban sector. You have a lot of different sectors affected. So we were discussing about that, key infrastructures like roads, bridges, hospitals, schools. But you have also, for instance, small and medium enterprises that are a real, very important part of the economy. And of course, you have people, poor and vulnerable peoples, that are particularly affected by this risk. It is really difficult for a city, for a mayor in the city, to grasp all these risks and all these sectors. And that's why I really think that this approach of climate risk management, and the keyword is management, is tremendously important, because it brings together different sectors, different offices maybe that are scattered for all these different sectors, responsible for roads, the other one is responsible for health, and another one is responsible for let's say, small and medium enterprises. And this approach of management bridges all the different sectors. Another important message, and I think we haven't touched that now, is that insurance, climate insurance, is not a standalone solution. So you cannot use it and expect to solve all your issues. It should be used as a tool. It should be used as a tool in order to integrate all these management aspects. Well, maybe I can give an example. So I said before that it's these risks, quantifying this risk, and we've seen in the presentation of Butch, this example in Lagos that actually you said, well, the city had no flood plans. And this is something that where I think the insurance industry comes in. So they have, I think, 200 years of experience in developing flood risk. I think the first flood map was developed by the competition by Munich Re. And actually this experience now they are using models and they have very performing models. And we want to use this model. We want actually to push the private sector, the insurance sector, to offer this expertise to countries and developing countries. And this is actually what happens in some projects with Allianz, working together in a public-private partnership. And I think this is the third message I want to deliver. There is a need to push forward actions from the private sector and then move from having the private sector being the culprit of climate change to being part of the action. And I think this is really important to do that, and this is something that the UN has to push forward. This is something that the experts from NGOs has to push forward, and this is something that I think municipalities have to ask for, and they have to open up as well to use this expertise in order to increase resilience in different municipalities.
Thank you. Thanks, Maxime, for that. I think it was very. So I think the one of the part of the gist of your speech was about really multi-stakeholder engagement on this. This is not simply an insurance company solution. The other one was the fact that it is also not overclaiming that, for example, an insurance solution will be a silver bullet. It's really just a tool as part of a package in addition to what insurers can do on risk analytics and risk management. So it's one of the set of tools I think that local governments can look into as part of an integrated approach to climate risk management. And we haven't even touched the whole agenda of investments. Mm-hmm. So I think this holistic perspective of risk and what insurers can do and cannot do as well is really important as far as this agenda is concerned. As we said, we also wanted to get you engaged on this. Before we move on to local government perspectives, let's go to our first Slido poll. And for those of you who missed it earlier, go to Slido and then here. And they enter the event code Climate Risk. And let's take our first pulse survey.
Yeah, so the poll is on. Sorry, you should have access to it through your cell phones. You just click on polls and you should see the question already, and it's open for. Yeah.
Do you want to? Can we show it here or no? Or if not, then.
Just a second. I'm sorry.
Yeah. Yeah. So while we're waiting for that, so let's just proceed and let's sort that in the meantime. But let's move on to Africa, in particular Zimbabwe, and we have our colleague Lawrence Mashungu. who's the climate change mitigation expert at the Climate Change Management Department of Harare
Yes.
in Zim. Lawrence, I mean, you've heard there's been a lot of download already about what the UN is trying to do with the insurance industry, what leading insurers and initiatives are working on. I think it's good to be able to boil it down to the local level and see, what are the things that you are experiencing in Harare, what is the sort of engagement that you've had with industry, and what is the thinking on the engagement with on climate risk management in particular, and also the engagement with insurers.
Okay, thank you so much. I want maybe to start with maybe from your presentation, what I got, and which I also thought is also very good for us, maybe in the government and also with the local authorities to internalize, is the issue of climate literacy and also climate awareness. Maybe I can hasten to point out to the fact that I think recently, a month or 2 months ago, Mozambique, Zimbabwe, Malawi were hit by a serious disaster, that is Cyclone Idai. So when that disaster came, there was a lot of flooding, and some of the houses were definitely flooded in some small parts of Chiredzi, Masvingo, Mutare, and some whole sort of settlements and cities were swept away. And that which comes to me quickly is that in our cities, especially in Harare, in our residence and wherever we stay, find people throwing rubbish in waterways, and maybe not knowing that it's coming back to our homes. So one thing that maybe I want to stress is the fact that they always say that a stitch in time saves a nine. So one thing that we feel as the Climate Change Management Department is that there is a need for us to be able to design our cities with a view to knowing that there will be disasters coming. But I can quickly hasten to the fact that the insurance companies, when they insure issues like things like cars, when I own a car, you go to the insurance company, you want to insure it. There are a lot of issues that they obviously tell you. You might also need to do this. They also give you sort of some behaviors that you need to internalize so that you reduce that risk.
Absolutely.
So that's one thing which we feel is missing in terms of planning our infrastructures, and that collaboration with insurance companies is something that is missing. Because if that thing is done from the first instant, we know that when I'm investing in this building, these are the issues that I may need to look at. And if that thing is done, there will be so much collaboration within the insurance companies, and obviously our cities will participate. So that is the missing link from what we are seeing. And currently we are developing our low emission development strategies. We are also developing our climate change law. And a lot of those issues, they were thrown around the issues of insurance. But that discussion never went far. Maybe because of lack of this information and all this. So I think the underlying factor definitely is the issue of maybe capacity building, which is very critical and key, and to ensure that all these players, we are working together. And I think as countries are moving on to sort of update their NDCs for those who are in the climate change regime, I think it's also time for us to ensure that we integrate local governments and also integrate this issue of maybe risk insurance, which is also very key for us. And I think even from the video, I got a lot of inspiration, which I'm going to take forward to my country, because I'm sort of the one coordinating the local governments from the Ministry of, from the Climate Change Department, working with our local authorities, working with our ministry responsible, and also those sectors, finance also. That, so basically those are the perspectives for my country. Yeah.
Thank you, Lawrence. I think that would have been music to Simone's ears. I mean, Allianz might hire you if you had continued with that spiel. But I think it's the agenda that you set of, you know, of making sure that people are risk aware. Is very key. I mean, it really starts with awareness. If you are unaware of your actions that are leading to unsustainable things, then that is actually and if you multiply that across populations and cities, then that sort of behavior is the root cause of, you know, what you'll end up with later on.
Can I just say,
yeah.
it's not music, is it on? Yes, I think. It's what you said, music to my ears. In fact, I think it's a wake-up call. It's a wake-up call to us as an industry as well, because it's clear we cannot just go in there and sell an insurance plane. It's much more. It's developing it together, and it's providing you with capacity to understand the risks, and also to allow you to go like through a checklist to reduce these risks. And I sometimes compare it with the fire insurance, because 100 years ago, fire was a widespread risk in European cities as well as around the world, and we have come down to nearly zero fire anymore, And so the insurance premium has decreased tremendously from being very, very expensive to being very affordable and actually obligatory in many parts of Europe and probably the world. So this has come with a lot of engagement by the insurance industry. So I agree with you, but there is no template out there, and I think we have to move into that direction for having a template for an insurance contract that allows a city mayor to plan. Of course, you don't design cities from scratch, they are there already, but to see what he can do to improve the situation also in light of changing weather conditions.
Yeah, definitely, because especially with some tools that we possibly have, like the digital elevation models that we can employ to maybe planning our cities. If we were to do it together, there will be sort of motivation from the cities to take on insurance, and there will also be motivation also from the insurance companies to also work with us, because you know that your premiums will definitely be reduced, because there is sort of maybe that awareness, which is very, very, very much key in moving forward.
No, we agree.
Yes, and I think it's also interesting that the other thing that we need to consider is that obviously we have reduced risk over time. What Simone had mentioned, the curse of urban fire before in Europe has been reduced to significantly over the decades. You have examples also in Asia, for example, the cyclones that hit Bangladesh years ago that claimed so many hundreds of thousands of lives that have been reduced because of better preparedness and shelters, etc. However, the X factor that we have right now is climate change. So the past is not a good indicator of the future, and climate change could be seen as a great exacerbator of risk. And this is the X factor that we're facing right now, whether it's heat waves in Europe, or cyclones and floods in Africa. These are the things that are becoming more frequent and more severe that we need to come to grips with. I think we are ready we've solved the technical issue on our Slido poll. Are we gonna, our first question is about your familiarity with what insurers do. So what are the types of services from the industry that you are most familiar with? Is it climate risk assessment and risk modeling? Is it physical risk measures to reduce risk? Is it risk transfer and insurance solutions? or set their investments in low carbon and resilient assets. So it would be good to be able to get your views on this. Are we able to show results?
Absolutely, yeah. So it's okay, so we already have 35 answers.
Okay. That's interesting that we have, is that our universe 36? Yeah. Okay. That's interesting. At least we have answers for all, which is good. But it's also interesting and informative that risk assessment and risk modeling is at the moment #1, because I think that's actually at the crux of what we're trying to discuss here right now, that the first step in climate risk management is to understand risk and being aware of it. So I think we are off to an interesting start. Why don't we have a couple more questions later on, but let's move on and get deeper into the local stuff and also deeper into Africa and hear from our colleague Sylvia Tabitha Muzila, the mayor of the city of Francistown in Botswana.
Thank you very much. As you have already indicated, good morning to you all.
Yeah.
Good morning, ladies and gentlemen. As already indicated, I'm the mayor of the city of Francistown in Botswana. I'm not an expert in climate issues, no financing or insurance for climate change, etc. I'm just a mayor, I'm a politician. I was told last night that I should join the panel, and because I'm a politician, yes, I accepted that. So that I could say my story. But basically, as a mayor of the city of Francistown on issues relating to disaster management, what I know is that Botswana has a disaster management policy, national disaster management policy. And I'm happy that here I'm with a neighbor from Zimbabwe. When the cyclone hit Zimbabwe, we in Botswana also felt affected because they are our neighbors, Zimbabwe, Malawi, and Mozambique. We could even feel the winds from the other side. We felt the bit of winds. Of course, it didn't affect our infrastructure whatsoever, or our buildings whatsoever. But then we were affected in the sense that they are our neighbors. And I believe that they would have noticed that Botswana stood up on its feet. I myself, as the mayor, who is also at the borders of Zimbabwe, had to stand up and face the private sector to say, here we are, we have a problem in Zimbabwe, Malawi, and Mozambique. What can you do to help me as a mayor to also contribute towards helping the victims? And indeed, our private sector, NGOs, etc., did assist, and through their ambassador, we submitted supplies and help to those victims in Zimbabwe. That is the story I wanted to touch on, because it's very, very important that as countries, we should also take part even on disasters that affect other countries, especially when they are our neighbors, our brothers. Basically, going back to the disaster management policy, we have this disaster management policy that actually covers issues relating to floods, as I've already said, and also issues relating to drought. I think most of our countries in Southern Africa these years are now mainly affected by issues also relating to drought. Even if we have floods, these floods, the rains will come, whatever we call it. It will come in a very, very big way when it had been so dry and nothing going. And then it will hit even more when it comes in that way. So that really we also are affected by drought spells within the country, and even heat spells within the countries in our region. and also wildfires and other wildfires or felt fires, I don't know what you call them. You know, the policy also discusses the country's institutional and legal framework for disaster reduction. We, as a result, we as cities have also arranged insurance for our own assets. I remember that a few years ago, I had to work on ensuring that our council assets, all of them are insured, and the process is still ongoing because we have to verify our own properties and ensure that we insure them. And this insurance is not just with no cost. We have to budget for it each and every year, and the properties are many in the city. So we are in the process of insuring each and every property of the city. And this insurance was a result of the National Disaster Risk Management Plan that was introduced in the year 2013, which was developed in order to provide information and guidance for our building our disaster resilience and natural hazards management for our cities. Let me also touch on issues of the fact that we as cities also have the disaster management committees. They are multi-sectoral. They cover each and every body. Like I've already indicated that I had to go to the private sector. The private sector, NGOs, CBOs, the public sector itself, ourselves, and government, other government offices, we are part of that multi-sectoral approach that is resulting from our National Disaster Management Plan, so that when a disaster strikes, any disaster, it be for floods, it be, we are also having some other disasters like the disease outbreaks, especially affecting our cattle, because our economy relies on cattle rearing in our country, so that our beef is our second in the economy. That is one of the sectors that provides most of our economic activities in terms of our economy. So that when foot and mouth strikes, all of us, even if we are not in the agricultural sector, we also have to stand up and ensure that our disaster committees take their part in whatever they can do towards the plan for managing an outbreak of foot and mouth, and even for drought, etc. But basically, that is that. Let me not take more of your time, because I've touched a lot of things that I thought I could share with you. But basically, we are also, as an African country that has challenges when it comes to financing issues such as these ones, especially the climate change issues. Over these years, it has been very difficult to even introduce the subject for budgeting, because most of our departments and ministries are also new when you talk about issues of climate change and even issues of disaster management, etc. So that you have to be fighting in order to get the meager finances. But what they give us is just financing for disaster management in terms of food supplies, or purchase of tents for relief, or purchase of small things like fire extinguishers in terms of fire things, etc. As for budgeting for the bigger amount of money for development or for assisting developments that have been wiped out by floods, it's very, very difficult. Otherwise, thank you very much for listening to me.
Yeah. Thank you, Mayor. Thank you, Mayor Mazila, for eloquently stepping in and actually articulating in many good ways the situation in Botswana. I think you touched on a couple of things that are interesting. For example, the fact that Botswana has a national disaster risk management framework that has filtered through and helped create schemes like insurance for your assets is interesting. It already leads to a certain degree of what can be done at the national that can be connected to the local that can lead to better climate risk management. The other thing that I thought struck me beyond obviously the range of risks that you have to deal with is the capacity for engagement with the private sector and insurers. Lawrence, the biggest word that Lawrence mentioned earlier to me was if. So we were talking about scenarios of engagement that this could be good things that could happen, but it's still an if. So what are the things that are lacking to make these things happen? So Mayor Munsila, I think I just wanted to ask you further on how much is it that your town and city is actually engaging to the extent that with insurers in Botswana. I know some folks there from the Insurance Institute of Botswana and Continental Re who are based there, and I could relay the message to them if you wish. But I just wanted to get a pulse from you on if there is enough engagement or engagement at all with insurers in Botswana.
In an organized manner, like within the disaster management plan, I don't believe that it is set up in such a manner that it is within the plan. Our insurance arrangement as a council is an individual arrangement. It's an individual arrangement of the council of Francistown. You'll find that maybe the city of Gaborone would have a different insurance company. With us, we're using the Botswana Insurance Company. It's advised for our other insurance issues by government.
Okay.
We use the Botswana Insurance Company.
Right. So we'll look into that, but these are the realities that we face with. There are there are national plans, local government plans, and most of the time what we've seen is that there's very little engagement within the industry. So these are things that we're trying to probe, and this is the reason why this convergence of stakeholders on this panel in this room is really important, because this is part of the process of getting to know each other and what are the things that can be done. I wanted to...
Sorry,
yeah.
Let me also explain that I'm talking about insuring council assets, in other words, government assets. But there is this insurance part of insuring the properties of individuals, of the people who would be affected by disasters. That is the part that we are lacking. And I believe Zimbabwe too, and Mozambique and Malawi after the cyclone, I am sure they felt the need for that kind of insurance of the properties that don't belong to government.
Right. So,
Yes.
This is a good point, because there is increasingly an agenda on not only ensuring, it has to be both looking at public and private assets. What are the schemes available? And sometimes it could be a market solution. Sometimes it could be a public-private solution. Sometimes it's a public insurance scheme. So these are all important things. But regardless of the scheme, the bottom line is that these are tools that can help better manage risk, both in terms of risk reduction, at the same time financial risk management. I just wanted to check the pulse in the room on another question. What is the single biggest reason for the limited role of the insurance industry in your city's climate risk management activities? So we have several potential answers. Lack of understanding of how insurers can contribute, lack of access to affordable and suitable insurance products, lack of funds for insurance solutions, lack of trust on the insurance industry. I think that's it.
2 times.
We don't need to repeat it, Alvaro. Would be interesting to hear, Mayor Mozilla already indicated, for example, the financing angle, that, and this is not an isolated case of, you know, local governments have limited financing, and the financing available is really to meet basic needs. And whether you are in Francistown in Gaborone, or we were talking to over 20 mayors in the US, they also have a financing crunch. And so this is increasingly an agenda that we are seeing in developed and developing countries. And so this idea of pre-disaster risk financing, which we saw in the video and what has been articulated here, it's becoming more and more a focal point of discussion. So as we speak right now, Simone, there is a need to better communicate.
It's a positive message. I mean, I would have hated to see the last bottom be the 45%. So I think, no, it's positive in a way, because it means that we have a chance to reach out.
Yes, so there is a real opportunity for insurers to be able to communicate its value proposition. There's also issues about affordability and suitability of products. Not everything can be off the shelf, could be offered. It has to be, could be more tailored. Okay, I think that's a very good point. So we still have time for questions. And at this point, we want to make sure that those of you who, beyond voting, that have a chance to voice any questions that you may have for the panel. Yes?
I think I can maybe say it loud enough that I don't need a microphone.
You want to introduce yourself and your...
I'm sorry, pardon me. Peter Meyer, U.S. Thank you. Peter Meyer, U.S. and Germany. And I guess I'm looking at I run my own little consulting firm. I'm also a local government official, elected variety. But I look at the question of the risk modeling, and especially in the climate context, I ask myself, you've got a significant amount of risk experience, you've got your claims, you've got the claims that have been filed, the payments that have been made, etc. How is the industry now, and this may not be specific to municipalities, but it may become very specific in a number of ways, how do you modify the historic risk data that you have for the new uncertainty that is coming from the climate change itself? Because it seems to me that you may be more certain about future climate impacts in some parts of the country, some parts of the globe, rather than in others, and that you may have more trouble providing, the appropriate product at the appropriate price in some parts of the world rather than in others.
Yes.
And obviously that's not much more problematic, it seems to me, in the global south, where they may not have been buying insurance, where you may not have that kind of experience. How does that affect the way in which you operate?
I'm really grateful for the question, because it brings me back to the first survey, which showed that there is a familiarity with the fact that insurance companies have such models in the first place. However, the dichotomy that was used there, climate risk, is misleading in a way, because it's not climate risks that we model, it's weather risks. Yeah. So climate is tickling into our data as we go along and as we move into a warmer planet, right? But on a mere functioning of the insurance industry, we do yearly contracts, which means that if you are affected significantly by climate change and your your losses increase from one year to another, the insurer always has the possibility to just stop the contract and stop insuring. So our risk of taking on a higher climate exposure is only on an annual level. Yeah? So we do not have to take into account the next 10 years. This said, I always find this a very cheap excuse, yeah? Not to take this into account, because we also see that there are so many areas that are affected by climate change and will be increasingly so, that have no insurance and that have no access to affordable insurance. Now, there are always two parts to pricing an insurance, and now I get a little bit techie. I apologize in advance. The one part is the real risk. That might increase over time, reflecting climate change. The other part is what we have to take from our own capital, from a regulatory perspective, to be able to have this risk in our books. That's the reserve capital. Now, for many of the places that are very exposed to climate change, we are not we don't have a high market share. We are not very present. We don't have many risks. So anything we do insure helps us to diversify our overall risk and lowers the capital we need to insure. In very simple terms, it's cheaper for us to insure in Africa than to insure, say, the east coast of the United States. Okay? And as a result, we are not so worried yet, and we can still provide insurance for a lot of the parts of the world where you would think this risk is high and it's increasing. But of course, we also invest in better risk models. So as we go along, we actually we have a keen interest in understanding better the effects of climate change. And this is an important part of many industry corporations, including your own.
Yes, and as I mentioned earlier, so as we speak right now, insurers themselves are enhancing their models and looking at 15, 20, 40 years down the road and what changes in temperature may mean in terms of vulnerability and impact on insurance portfolios. So I think this forward-looking approach is really an important angle to take into account. And this is where I think those models could be used as tools for better awareness of risk concern. And the issue at hand sometimes is that if this exists within the industry, how can these tools be more widely deployed in a way that it could inform local governments better? Maxime, you wanted to add on?
Exactly. I just want to say just one more point. It's not just about the models. So yeah. I think, especially in developing countries, we have seen that in the recent years a tremendous increase in data, because without data you are not able to run these models. And for a long time it was hard to get good data. Especially in developing countries, but now with the variety of satellites images that are calibrated on ground data, then on ground truth, then basically these models are much more performing much better than 5 years ago.
Mm-hmm. But it's still a very narrow time horizon that you have that data. You don't have a long track record.
Yes. That's an issue for calibrating, but it is I just wanted to give a positive message that in the future it will increase, and the quality and the precision of the output of these models will be better.
Yes. Are there more? Yes. There's another question.
Yeah. Hi, Daniel Raisman from AIR Worldwide, so catastrophe modeling firm. So I would say, in addition to very good comments up here on a yearly standpoint, but also I think access to capital markets, alternative risk transfer solutions. So alternative methods to insuring beyond just 1 year, but looking into the future. So I think as the insurance industry opens up, there's a lot of availability, a lot of interest in the capital markets to investing in this risk beyond just traditional insurance policies. And so I think, to the extent that these folks also have an appetite to explore additional products, it's not always about having the most, as we said, it's a data poor problem or a data rich problem, depending on where you are. So I think we can see, I mean, models such as ours develop with more data, more accessibility. Obviously, from the insurance standpoint, there's much interest in what's going to happen next year. So there's not so much of a, there's increasing interest in 10 to 15, 20 years. But from an insurance standpoint, traditionally, it's a one-year period, right? And so that's how much of the models are developed to date. But that doesn't mean that there's not alternative ways to insure people and alternative, interest in these products from companies like Allianz or Munich or others.
Thanks, Daniel. So I think he was also touching on innovations there. So packaging risk in a way that it becomes a security that investors can invest in. For example, the most famous one would be a catastrophe bond, where investors can invest in that, and then if an event happens, then there's a payout. So I think there's also innovative schemes. That's an example of an innovative scheme, and that the industry has worked on together with the capital markets as well. Any other question? Yes.
Yeah.
Thank you. My name is Leana. I work for the city of Johannesburg in South Africa. So it's more a comment about, I think, an example of a very good collaboration. Recently, there's been an initiative that was completed in South Africa called the Green Book, which is basically a collaboration between research institutions in the country, the CSIR, funded through a number of donor contributors and national government, that actually created this climate risk framework and information system. But what was interesting when I attended the launch as a city official was the presence of one of our large insurance companies, Santam, who's going to continue with funding the second phase of this program. And it brings this collaboration onto the forefront, actually, where you see national and local governments working together with the insurance industry, pretty much in the same way that you've been explaining some of the Allianz initiatives. And I think it does more than one thing, because it touches on my African colleagues' needs for broadening the discussion, bringing more people into the space of advocacy, understanding of the issues, because that tool is open and available to life and everyone, actually. But it creates interesting links in the minds of people who wouldn't normally have made them. Last comment, my angle is more from, we're working on a new building efficiency policy, which is more about how to build better in the future. And again, it's interesting, we are so reliant on the support of the insurance companies and the financial institutions to support innovative financing mechanisms for building differently, and also to make it almost more requirements to have good rates for insurance, for example. As a private sector, if you wish, incentive for a more responsive built environment, and not just a government regulatory one that says, we want you to do this better because we have these huge policy agendas. So it's a very interesting collaborative space, and it's very positive that the insurance companies and the financial institutions are interested to actually support this. Thanks.
Yes, and we know Santam very well, and that their journey has been ongoing for Santam over many years. I mean, we've worked with them in Dar es Salaam and working with the city of Dar es Salaam in looking at better climate risk management there. The engagement with the Council for Scientific and Industrial Research also maybe 8 years ago was during the climate conference in Durban, was launched there on how the Southern Cape, particularly Eden community, could be more resilient. And there was a really good study on the 4 dunes that are protecting the coast were being degraded, and actually were leading to more claims. And that was really what one of the key findings there. So this engagement of proactive engagement by insurers with government and other key stakeholders is really key. And so you have Santam, you have Allianz, Munich Re, etc., who are really taking that agenda. And we are seeing more and more, the sample size is getting bigger of more collaborative action, but it's not, for sure, not yet enough. Do we have time for probably one more question, and then we should bring it to a close? Okay, do you want, yeah, we can probably just plug in one more question from our Slido poll.
There are questions about the collaboration with the insurance industry, about specifically the data and statistics that maybe the insurance industry can have and can help feed the databases from the cities. And yeah, some others about case studies that have already been discussed. Also about the questions on how investments on the city on resilience can reduce those premiums. So.
Yeah, I can take up the first and make a comment on the second as well. So I think the question of data sharing is one where one side points to the other very often. So for instance, our work with the GIZ in Ghana, in the city of Accra, we have very little data because it's not a place where we have a lot of disaster-related business yet. So other parts of the world we have much better data and risk modeling capacity. But for our, I would say, white spots where there is simply very little insurance activity on a general basis, not just us but also other insurers have are just developing this market. We also often rely on public data. So, for instance, there we had a situation where we knew there is a lot of public assets, but there is no central registry where all these assets can be found. And I think we just had this comment here also from Mrs. Mozilla that actually this is not so straightforward because you need to know what you own and you need to know who is maintaining it. This is the asset data, so the exposure. There is then the other side is the hazard data, the data related to natural disasters, to the perils, to flood, rainfall, to the windstorm intensity and all these things. And there very often we rely also on external data providers, which means we either buy this data or we look at what is available for free. And there are very interesting industry initiatives that actually try to put together the knowledge that is in the entire industry so that there is also a possibility to actually share this, find ways to find a format, a standard that this data can be put together, because usually data comes in different formats and it's very difficult to compile it, and it's called OASIS. And so this OASIS initiative is doing this since now quite a while, and I think they're also progressing, and each and every insurer, bigger insurer, has an expert that is contributing to this work. On the second question, I think, sorry, say again, that was the...
Investments.
Investments. I just think I would like to refer to the lady from South Africa, because it shows that if you have a cooperation between regulation, where you say, this is a building standard, or this is a standard that would allow you from A to D to get better insurance premiums if you adhere to A instead of D, well, that helps, of course, getting also then the banks to finance, and it puts a sort of a label in place that makes it a lot easier to mobilize a business case for investments. Very difficult, we find sometimes the case for investing in making public infrastructure more resilient if there is no direct payout from that investment. And so there has to be some form that is commoditizing, so gives a monetary value to certain investments. Otherwise, it will always stay sort of a pro bono activity where you come in and give advice as to what it requires. If you look at the 10-year or 20-year outlook for public infrastructure, it might be as long as 100 years. That's 100 years is what you count for if you build a street, a highway, or a bridge. That is a very long time to look out for, but maybe there is some expertise both in science as well as in the insurance industry that tells you as to what level you have to build, so what could be the level of flooding in the future in the next 50 years, and there can be a form of cooperation here. But ideally, you have something that combines with regulation so that you have a monetary price tag to your investment that makes it cheaper to invest in resilient infrastructure, even though the payoff may be over a longer time to come only. That's the reduced cost, of course, to dealing with disasters when they hit.
Thank you, Simone. I think we would need to end at this point. So obviously, we've covered much ground during this session on the concept of how insurers could work more effectively with local governments, zooming in particular on climate risk management. And we've had Allianz and MCI here setting the scene properly on what they have experienced on this angle. And then you have real live stories in Harare and Francistown on what are the things that are happening there, what are they experiencing. We're closer to getting more of an idea on what are the things that need to be done in terms of greater engagement. So as I mentioned, this is the first of two sessions. My colleague Matthias Range from GIZ is going to lead a second session. I love the title, From the Venue to the Street, building a roadmap to connect insurance with climate risk management. So we are starting to shape some elements, ingredients for positive engagement. And Matthias is actually going to lead a session where we can go deeper into actual case studies on the ground that GIZ has worked on in Ghana. At the same time, we want to share with you, our colleague Daniel is here, who will share a very ambitious global partnership called InsuResilience that is really looking into promoting climate risk insurance solutions in many vulnerable countries around the world, backed by the German government and other partners. And I think that's an exciting connection to this.
Many insurers.
And many insurers to this on this agenda. And I think we didn't want to leave you hanging with all of these things that we have on the table right now that we can do. And that's the reason why we'd like you to go to the next session in order to dig deeper and come up with some sort of a roadmap for action. Thank you so much.